The UK has taken the lead in Europe's booming crypto scene with a staggering $217 billion in transactions last year. As stablecoins outpace Bitcoin across the region and the EU's new MiCA regulations aim to bring order to the crypto market, Europe is at a turning point in crypto adoption and regulation. Here's what you need to know about the changing landscape and how it could impact you. Hi everybody and welcome again to the latest episode of Enter Crypto with me, Chris Kenyon. Now in today's video we're going to be talking about the UK dominating Europe's crypto scene. Now according to one guy, Jordan Wayne, who is the UK public policy lead at Chainalysis, he's saying that the UK has this significant opportunity to leverage the high levels of grassroots adoption in order to foster the sector's growth. So as always guys, let's jump straight into this article. We'll give it a quick read through, see what we can learn, and then we'll comment after. So the UK is the biggest crypto economy in Central, Northern and Western Europe. This is according to new analysis from blockchain data company Chainalysis. The firm's latest report, the 2024 Geography of Crypto, ranks the UK at number 12 in its Global Crypto Adoption Index, with $217 billion received in crypto between July 2023 and June 2024. That's out of the $987 billion in value on-chain held by the CNWE region as a whole, accounting for over 21% of global transaction volume. After the UK is Germany, then France and the Netherlands, all receiving the highest amounts of value on-chain. According to Chainalysis, the CNWE region has the second largest crypto merchant service market, providing settlements, pay-ins and payouts, after North America being driven largely by the UK, which saw 58% year-on-year growth in these services. The data reveals that stablecoins are the most popular asset, making up 60 to 80% of the market share each quarter, far surpassing Bitcoin. And across the region, stablecoins account for 24% of purchases traded with fiat, while Bitcoin makes up just 6%. Interestingly, in contrast, Bitcoin purchases in US dollars were found to be far more common than stablecoin purchases, evidence of a growing divide in global approaches to adopting crypto. For transfers under $1 million, CNWE's stablecoin volume grew at 2.5 times the rate of North America, and in fact stablecoins made up almost half of all crypto inflows in the region. Over the past 2 years, data shows that stablecoins have been the top choice for transactions in Europe, averaging 52% of all transactions between July 2022 and June 2024. The report also delves into the future of crypto in light of the new MiCA regulations from the EU. These regulations will cover various types of crypto assets, including utility tokens, asset reference tokens, and stablecoins, aiming to enhance transparency and develop a framework for issuers and service providers in the crypto market. The legislation replaces individual EU member states' national legislation for crypto assets to create a consistent regulatory environment, with crypto providers now needing a license to issue, trade, and safeguard crypto assets. So there's a few interesting things going on here, one of them being this kind of shift towards stable coins, because we've got these data now showing that stablecoins are becoming increasingly dominant, particularly in Europe, and they are making up now 60 to 80% of transactions, which means they've got 60 to 80% of the market share. So for regular users, this suggests that stablecoins might be more favorable for everyday transactions due to their stability. This is of course compared to more volatile assets like Bitcoin and the other cryptocurrencies. And so this trend means that users in Europe will probably see, I think it going into the future, more merchant services and other platforms accepting stablecoins, which in turn will make them more practical for daily use. So I think we're going to see more and more companies willing to accept and willing to receive more stable coins for goods and services. And we're also seeing the regulatory impact of these MiCA rules. So this introduction of the markets in crypto assets regulations in the EU is basically creating a more structured and regulated environment for crypto. And so for users, This will mean greater protection, more transparency, equating in more trust in crypto platforms and the assets that they're using. Licensing requirements for crypto providers may also lead to a safer, more reliable service. It could also mean, though, that some smaller or less compliant or, companies that are not able to comply with these new regulations may leave the market, may go elsewhere. And you've also got now these sort of global differences in crypto use. So this article points out to this sort of growing divide in how different regions are approaching different, having their own little crypto adoption locally. So while you've got stable coins that are dominating Europe, Bitcoin still remains the more popular choice in countries like the US and North America. And so for users in different regions, we've got, it's influencing which currencies they are prioritizing based on the, local trends or market preferences. And we're kind of seeing that people have now got a choice with money. They're kind of choosing which currency they want to use. Normally, for example, in the UK, we would just by default automatically assume that everybody uses the fiat currency, which would be the pound, and the euro in Europe, and the dollar obviously in America. But we're getting people now get to choose. We can and change as well if we don't like that. We can move into a more private cryptocurrency if we want, like Monero. We can use currencies with smart contracts if we need to use that, utilize that as well, like Ethereum, Polkadot, Cardano, these other types. So we're actually getting lots and lots of choices all of a sudden over money, when that's really never been the case. The government kind of controls the money, and they've always told us what to do and how to use it. And according to this article, we've also got increased adoption, and within merchant services, it mentions this 58% growth in crypto merchant services within the UK. This indicates a rise in the number of businesses accepting crypto for payments. I think that number is just going to get bigger. And so for users, this means that using crypto for day-to-day purchases, online or in stores even, it could probably or will probably become more common in the near future. And what's really great to see here is that this the sort of UK's role as being a crypto leader is starting to kind of play out. We're seeing real data that supports this narrative. We've had this narrative, we've had lots of politicians saying that the UK or London is going to be the global hub for crypto, like it has been for finance over the last 30 or 40 years. We haven't really seen any data to back that up. We're now starting to see it, that people are choosing the UK, and that's fantastic. That's really, really great to hear. The UK being the largest crypto economy, according to this article, in the CNWE region, is, highlighting its central role in driving innovation and driving adoption. And this is notable because, given the country's evolving stance on crypto regulation and its potential to influence broader EU crypto dynamics, this is even at post-Brexit. The rest of the world looks to the UK as when it comes to regulation and laws, and a lot of them kind of copy us because they say, does that work? Is it working for them? Well, if it's working for them, then why don't we try it as well? And so you get lots of places using our regulations, using our laws, using our standards for their own. And so anything that's positive for crypto is good when it's in the UK, because you might get this sort of other knock-on effect in other countries following suit. And so that's what I've got for you today, guys. As always, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you next time.